you remember how noisy social media got back in early April when all that tariff uncertainty hit the markets. It was a crazy time, and it was just a pure panic environment.
Yeah, hey, the market hustle, helping you to succeed, teaching like nobody else. Financial empowerment, giving you strategies for generational wealth, so you can start helping yourself. More money for you to be getting. This the moment for you to be winning and be living financially independent.
Market Hustle community, welcome to episode 51. It's been a busy few months since we all did a group podcast with the entire team. We haven't done one since, I want to say mid-April. So today we're just going to keep it pretty simple, do a quick catch-up episode with everybody, see how everybody's doing. But first, I do want to take a moment just to thank everybody who's been a part of the Market Hustle community, especially those of you who have been here for years. We just crossed a huge milestone on Instagram, hitting the 1 million people milestone in the community. Pretty crazy to think about, and I've been kind of reflecting on just the start of this journey back over 5 years ago when I just kind of started randomly posting random investing tips. And of course, now it's turned into a full-on asset ownership movement. It really kind of highlights the power of social media. And really, if you've ever taken the time to like, share a post, or even support the Market Hustle in any way, I just want to say thank you. I really appreciate it. It means the world. You are the reason this platform exists and continues to grow. So really, the goal is just to keep the momentum going. I'm excited to see what the next 5 years brings us. We've got a lot planned with the podcast, with the Market Hustle in general. And of course, I just want to give a special shout out to our lovely co-host and of course the past guests who have made this podcast what it is. It's always a great time getting to record these. They're a lot of fun. That being said, let's check in with our co-host. It's been a while, like I said, so let's see how they're doing. Let's start with Bafi. Bafi, how are things going in New Jersey?
Things are good, man. I know it's been a minute since we got on this and had some of these podcast episodes. I just got back in town all the way from a hot 110-degree weather out in Saudi for about a week and a half, and then Dubai for another week and a half or so. So for the most part, in the month of May, I've just been spending my time out there, learning about the history, the culture, just the environment, how they've been able to build such an incredible system and place and culture that's open to the world. And so, yeah, I mean, that in of itself is a whole podcast episode by itself. So, yeah, it's great to be back in the swing of things. It's summer here, really enjoying the summer, making sure I'm spending time with family, friends, loved ones. And it's good to get back on top of things and provide some more value to the people.
I love it, man. Well, great to have you back. Glad the Dubai trip was solid. It's pretty nice. I mean, I was also in Japan while you were in Dubai. So I kind of felt like the Market Hustle team. We were just kind of all over the world doing our little traveling, our world tours. It's pretty great. Let's jump over to Pierce though real quick. Pierce, I know you just recently had a birthday, so happy late birthday to you. But how are things going, man?
I have a sideways license now, so I feel old. So I mean, dude, it sucks. Other than that, life's been good, man. Just been hot, busy. My car was in an accident. I wasn't driving. I mean, I wasn't even in the car, but got it back finally. So I've just been enjoying that and hanging out with some friends and enjoying life, man. Summertime here in California.
Yeah, you got that extra sunshine now that the summer's heating up, so enjoy that. But great to have you back, Pierce. And Pierce, I know we've been, working on some side projects behind the scenes, part
Sure.
of the keeping that momentum going with the Market Hustle. So really excited to kind of see where that heads over the next 6 months or so. But let's jump over. We also have Fernando here. It's like Fernando has been helping out with some partnerships behind the scenes as well, and we'll talk a little bit about that later on the podcast episode. But we wanted to make sure we bring him on as well, just so we can kind of see what he's up to, how things are going on his side of the world back in Florida. And it's kind of interesting, right? Like I feel like all of us were kind of like on the four corners of the U.S. I'm up in the Pacific Northwest. Pierce is down in Southern California. We got Bafi up in New Jersey, and then Fernando in Florida. So we're covering all angles of the country, which is kind of cool. But yeah, Fernando, how are things going on your end, man?
Everything's going good. This year definitely started with a good momentum. And the goal is to keep that momentum flowing and going. I think we're almost halfway right now. And that's how I'm seeing it. So lately, I've just been kind of just very grateful for everything I'm doing every day, and looking at things differently. This is kind of like my motto, to kind of just be grateful every day, and yeah, and try to grow too, and of course learn, which is what everybody's here for. Like mental growth and learning every day is either about stock market or anything. So yeah, that's what I've been doing in family as well, enjoying every holiday together with family.
It's a perfect balance right there.
Yeah.
It's been cool. I mean, even the last couple of hosts or guests that we had on were pretty insightful. We had people from the private equity side of things, even learning from Steph Guild at Robinhood, like just bringing on these different guests so not only the community can learn, everybody listening in, but also ourselves, right? Like that's an even better part. Like selfishly, we get to ask questions and learn from these incredible people, which is just another great part of this podcast. But Fernando, great to have you back, man. Fernando's been really helping out with some of the guests, like finding some great guests to come onto the podcast. And again, we'll share some of the updates on that a little bit later with what we got planned later this month. With that being said, let's kind of roll into the podcast. So it's been about nearly a couple months, and when we last did an episode, a group episode, it was me, Pierce, and Bafi, and we were just kind of talking over the current market dynamics. So if you remember back in early April, I mean, first off, let me ask you guys: do you remember how noisy social media got back in early April when all that tariff uncertainty hit the markets? I mean, we saw like it felt like social media, like everybody was panicking, telling everybody to sell. I read quite a bit of people telling people to cash out their 401ks. It was a crazy time, and it was just a pure panic environment. And of course, now that it's June, we've seen quite the rebound, right? Like from the April lows, the stock market, measured by the S&P 500, is up nearly 20%, which is kind of nuts. Like how fast things can change, and to me, it just highlights the importance of sticking to a plan, right? And not getting a plan that doesn't get you caught up in the noise. Because like if you're only paying attention to the sentiment and you're making all of your decisions based on what everybody else is doing, you're going to get pulled in every single direction. So I think just the last couple of months to me highlight the importance of having a plan, sticking to that plan, and ignoring all of the short-term fluctuations. Like that's really the key when it comes down to it. But I'm curious, maybe we can start with Bafi. Like, what were some of the key lessons you've maybe kind of highlighted or thought through over the last couple of months?
Yeah, man. I think one of the first things that come to mind is really I'm happy that especially our newer listeners and people that are new to the investing world actually got to experience why and the reasons behind why we preach the foundational pieces, the long-term approach, having a certain perspective and knowing when to ignore the noise, especially on social media in April, right? So I think at its worst, market was down about 10 to 12%, give and take. And now is like you just said, it rallied up back again 20%. All of the good news of some of the good conversations that's being had between the US and China related to the tariffs and the percentages coming down significantly. And for the most part, I mean, my portfolio specifically is at all-time highs right now. And you would think there's a lot of negative things still happening in the news with geopolitical tension, wars, and some of these attacks and events happening, yet the market is still rallying and holding its own. So I think the first takeaway is number one, if the market goes down, just keep investing consistently, right? You don't have to change strategy. You don't have to go wherever the wind blows, right? For lack of a better word. Stay consistent. Ignore the noise. If you're somebody who's susceptible to social media and what everybody's saying, and you're not sure what direction to go in, your best bet is really to ignore that, all of the news and stay away from all of that. Just stay consistent, stay long term, and you'll be surprised how fast it recovers. And when it does recover, guess what? Because you bought at a discount in April, May, now you get the added benefit of more money at work than you typically would have had, right? So yeah, that's just a little bit of a takeaway, and always have a big long-term perspective on it. This is a blip. This is nothing. It's a great opportunity for all of us. Hopefully you've been able to take advantage. And if you wasn't able to, now you know how the game works. You know how it flows. So stay ready so you can benefit from the next one.
Yeah, exactly. I like that. Like turning it into a lesson. Like if you didn't maybe make the moves that you wanted to make, learn from it, right? Like this was the last couple of months has been a powerful lesson in the stock markets. And I think one of the best ways is to learn from experience and just real life in general. Like you can internalize the market lessons right in front of you when you pay close attention. Especially like I think an even important thing to highlight is how wrong many people have been, right? Like there were so many people making predictions of what was going to happen. And not only were they making predictions, but like they were like being hyped up. Like almost everybody agreed with them that the market was going to crash, 50, 60%. Now, of course, those people, they might come back and say, well, the variables changed. And it's like, yeah, they did. And that's what happens in the market. Like if you're always going to, if you're going to sell when everything's uncertain, and not make moves, then you're always going to be behind the curve. Because like if you're going to wait for the clarity, by the time there's clarity, the market's going to be back up at near all-time highs, right? Like or the market's not like you're not going to be able to take advantage of those early discounts if you're only waiting for clarity. Which is why, to me, like you have to stick to some sort of system, some sort of plan that keeps you level-headed, even when that uncertainty rises to crazy levels, like we've seen back in April. It's not to say that the fear or the uncertainty wasn't real. Like it was real. Like there was a lot of different variables at play. But I think what's important to point out is how quick things can change, especially when it's more around certain policies. I think like, if it's not like, if things haven't fundamentally changed or shifted yet, and it's more of just like a high level policy change, it's like things can change really quickly given that scenario. So like that's something to keep in mind is the future is naturally unpredictable. And anytime people start to think they have it all figured out or they know what's going to happen, to me, that's when you want to start kind of questioning things, you know? But great stuff. Great points, Boffy. Pierce, how about yourself, my friend? Like, what did you kind of notice the last couple of months? Were there any lessons that you kind of extracted or any insights that kind of stood out to you?
Oh yeah, man, for sure. I mean, thankfully this isn't like the first, like I like Boffy's terminology. It's like a blip. It really is. I mean, obviously things happen in the markets all the time, just normal fluctuations. I mean, don't just don't panic. I mean, until you see like, stores start closing or banks start closing, there's really nothing to worry about, dude. I mean, everything will be just fine. And it's like oh, like we always say, just don't try to time it. You can't time it. Just keep on buying consecutively, dollar cost averaging into it, and you'd be completely fine. Like Boffy, my portfolio is at all-time highs right now. Like it's making money, thankfully. And it's just depending on it. Like different sectors shine at different times. I mean, tech has been doing really well, so it's like maybe something like that will, change soon. But other than that, man, it's just staying consistent and just kind of I try to stay away from the finance social media stuff as much as possible because people are just so neglectful with the words they say. They're, oh, it's like, the extreme fear and greed, the indexes. It's just in April they were at all-time highs. People were in like such fear and now it's like completely changed. So it's for me, it's just, kind of stay and keep my nose out of it and just keep doing what I'm doing.
Yeah, I think that's smart, especially as like a brand new investor, right? Like if
Yeah,
you're brand new to this game, I think it's natural to want to keep a pulse of like every little thing that's going on.
absolutely.
And, of course, I think you can learn a lot by paying attention to like the business environment and the different shifts that are going on. But I think when it comes to building your wealth, especially just building your foundation at the very least, it's important to go into it with a business ownership mindset, right? Where you go in buying companies that you believe will not only grow in the future, but also be able to adapt to different business environments. Like that's also super important because like if there's a business that's doing, I mean, I think COVID's a great example, right? Like we saw a bunch of, COVID related companies that thrived in that environment when the economy was locked down, when everybody was on their phone, when everybody was on the internet. And then when the economy fully opened up back to normal, a lot of those companies that got their valuations pushed up, even Zoom, like Zoom was the big one. Zoom still hasn't recovered to all-time highs, but a lot of that kind of came crashing down. So it's just something to kind of think of, right? Like the business environment is constantly shifting. And when you're buying companies or buying stocks, that's a question you want to consider. Like, is this company going to be able to pivot and adapt to different business environments?
Yeah, Josh, and to your point, one of the hardest things about picking individual stocks is a lot of variables and dynamics, right? There's cyclical natures to business cycles, and then there are different environments where some businesses will thrive and do well, right? Like you just mentioned Zoom. Obviously, COVID is a big tailwind for Zoom and their business model and structure, right? Nobody thought COVID was coming, so nobody thought Zoom was going to go from $20 to $300 plus overnight, right? But then again, when the world reset and things change, which all of this is unpredictable, nobody knew when the world was going to kind of open the doors again for more interaction and collaboration and socializing. And so, guess what? Now, every business is not just online, they're also in person as well, right? So that comes with a challenge where revenues plummet and you're also dealing with competition, right? Nobody gets to live on an island and eat all the fish by themselves. I mean, we're coming with boats, yachts, planes, right? Everybody's coming with something to get a piece of that pie. So I think even businesses have a hard time predicting their next moves. How are they going to be sustainable? How are they going to continue growing their revenue and get market share? So it's very, very difficult to pick individual stocks and companies based on based on the future that nobody actually knows. Even the businesses don't know what the future holds. So they try to do their best to manage their resources, but they really don't have an idea of exactly what's going to happen. So, you could always work smarter and not harder. Just own all of them, so then you win no matter what. If Zoom goes down, you got Google, you're fine, right? Google goes down, you have something else, you're fine.
Yeah, especially with your foundation, like, at least have a solid, diversified basket of stocks. And then if you want to try out other strategies, on the side, go for it. It's a lot easier to, try out options, or if you want to go the trading route, it's easier to do that when you have a solid foundation in place and you're not leaving yourself vulnerable to whatever the hell happens over the next 5 to 10 years that are, it's going to be unpredictable, right? Like there's going to be another thing or another scenario that plays where it catches Wall Street off guard and things start to sell off, right? Like we're already seeing some geopolitical things kind of heat up, and that alone is, spooking the market a little bit, right? So like there's always going to be different events in the short term that impact things, and predicting those events is much easier said than done. And that's why we're advocates, especially for new investors, to build that long-term foundation, start thinking in 5, 10, 15-year terms. And then of course, buying quality companies like the S&P 500. These companies are literally experts at adapting and, sniffing out different opportunities to build growth, like grow the company and then build more profit for investors. And if a company in the S&P 500 doesn't adapt or they start to struggle, they're going to get booted out and replaced with another company that does. So like in a way, like although the S&P 500 will still ebb and flow, that doesn't mean it's not going to go down. Like it will in the short term. But the reason why the S&P 500 is so powerful long term is because at any given time during any given business environment, if the business environment completely shifts, and let's say tech companies aren't the hot stocks anymore, and it ends up being like utilities, like some random industry, what's going to happen is the S&P 500 is going to rebalance. It's going to take out the companies that aren't thriving during those business environments and bring in the companies that are posting results in that business environment.
Yeah.
It might take, a few years to see that change in your portfolio when it comes to the returns. That's why we can see, red years, maybe even 5 years of red. That's just something you have to think through when it comes to investing. It's risk management.
Yeah, no, absolutely. And Josh, I mean, we're seeing that right now, right? You look at gold, you look at crude oil, right? Crude oil just took off, going crazy. Gold's been going off for like what, 2, 3 years now, like just consistently. So there are changes and dynamics and shifts that happen. I'm not being a Debbie Downer. I'm not being negative by saying, hey, don't ever touch individual stocks, because me myself own individual stocks as well, right? But it's about knowing what you're doing, understanding the stocks you own, kind of having that curiosity to constantly, check your own perspective and not be biased just because you have it and it's going up. It doesn't mean that it's going up forever, right? It just requires more maintenance, right? Similar to like if you own a home versus you're renting, right? Let's say rent is your S&P 500. You don't really do anything, right? And if something goes wrong, you just call them to come fix it, whatever. But if you're picking individual stocks or you're going to buy a house or you're living in a house, it requires a little bit more maintenance, a little bit more, hands-on. You have to pay attention to certain things over time, right? And that's kind of what individual stocks are like. So if you're somebody who enjoys that, of course, by all means, make sure you do your due diligence, do your homework, and invest in good, solid businesses. Me, on the other hand, even though I own individual stocks, I'm lazy as hell. I'm more lazy now than ever. Like I don't even look at any individual stocks at this particular moment in time. I just don't feel like it. It's the summer. I just want to have fun, man. Like that's why I was traveling. Imagine I'm traveling, I now have to go look at stock research. I want to just sit on the beach and enjoy, man.
Bafia, I'm curious. Would you say that you found it more impactful to focus on your career? Like, has that been where like more your energy is to like increase your income that way and then
Yeah,
passively benefit from the
yeah.
stock market?
To be honest, yeah, I think there's a few priorities that I'm prioritizing over having to spend more time on like stock research and so forth. Number one, at the top of the list is really my relationships, right? And the two primary ones are my relationship with my parents, making sure I'm spending as much quality time with them, making sure that that's at the forefront of my mind because it's easy for that to slip away as we get older, responsibilities come in play, right? And because they're older, they don't have like 50, 100 years ahead of them. So I want to make sure we really enjoy the time that we have. And then in the same parallel level is really my relationship with my fiance as well, making sure that, hey, I'm prioritizing our relationship, our future, the things we want to do and experience together, and make sure that, yes, I'm not leaving that behind by focusing on everything else and letting that fall by the wayside. And then I would say the second piece or the third piece in that list is my career. I've recognized that I have an incredible opportunity. I work for an amazing firm, so I have an opportunity to grow and develop and maximize my network along with my income and also utilize their resources to learn so much more than just the business and industry that we operate in, right? So spending a lot of time there, looking to grow and develop, take on higher roles and more impactful roles, so I'm closer to the business. And also that helps with my income, so I have more resources to invest and enjoy. So I've been spending quite some time there. Then in the short term, I've been studying quite a bit. Some of you are definitely are aware that I'm studying for my CMA, so that is insane. So I've been working through some of that material. And then I just also want to enjoy the summer, prioritize my health, right? I sleep early. I mean, I know I didn't dive a whole deeper. Maybe next episode I'll dive a little bit deeper more in the entire trip and the experience there. But I sleep by like 8:30 p.m. It's insane now. Yeah, yeah. And I love it. I sleep by 8:30 p.m. I'm up at 5 a.m. because I try to keep that same time cadence when I was down there. And sleep has been like medicine. So the last 2 weeks since I've been back, sleeping amazing. I eat dinner around like 6 p.m., where before I probably maybe eat a little bit later because I was sleeping later. I'm also aware of my portions a little bit more. I'm somebody who can eat. I mean, there's no limit to how much I can consume. I'm like a vacuum, you know. But I realize like portions are important. So 1 to 10, 10 being like fully bloated, itis mode. I eat till about 7, right? So when I wake up, I'm actually happy. So I think those are the four main buckets where I'm spending more time, energy, and resources in terms of time and energy. But I know that those are investments and the benefits of that far outweighs spending 10x amount of time studying stocks, looking at the news, X, Y, and Z. But I'm also fortunate to be in a position where I can step away from certain things and a lot of moving parts, right? Or a lot of side hustles and some of these other extracurricular activities and really prioritize the big things. And that stems from the fact that I invested early, I invested often, I stuck to the foundation pieces, and it's been literally my compass throughout and is more so now than ever. And that's why I'm not really touching individual stocks right now. And the craziest thing is my portfolio is actually growing faster. Like I'm not even touching no in like looking at individual stocks, research and buying more of those, but the portfolio is growing faster. So I think I've kind of I would say evolved my investing strategy over time to be a little bit more holistic and understand that there are pieces in life where money does not satisfy those attributes or experiences, right? Or memories. And so I think I've learned to have a pretty good grip on that now that I'm in my early 30s and then eventually start thinking family planning and so forth. So yeah, very long spiel, but that's kind of where I'm at right now in life and that's where my priorities kind of sit. Yeah.
So from the day trader point of view, it's been a little different. The market has been very volatile, right? Of course, as a day trader, like Josh said, right, and all of you have said, it's important to have the base and have your foundational base because that's untouchable, right? That's what 10 years of stacking assets on there from the S&P 500 or any other ETF is important because I mean it, the S&P 500 is what hitting almost 6,000 right now. 6,000. It's going towards 6,500 is what big money says or whatever. Which is it's interesting to me that the S&P 500 keeps growing even with so much uncertainty, with so much volatility. And as a day trader, I trade stocks, right? So we trade up, and we trade like daily, like those highs. And it's like recently there hasn't been many highs, so you have to think other strategies to put your capital in other areas. So we've been practicing futures now, which is actually very interesting in the world we live in today. The markets they shift very gradually. Like when we had another administration last year, like political, it was a slower bullish grow. That's what I saw last year. There was dips, but there was a slower move. So it was more predictable in a way. Now with new administration, there's been a lot of volatility because there's been changes, but it's normal when there's changes. Uh, but with futures, what I was going to get to is futures, you can trade them 24/7. So I mean, last night we had an act of war going on, right? And it happened overnight in the Middle East. So futures you can trade it overnight here in the US. So you can potentially see that coming, like the answers are being given to us. So if you ever want to look into futures, you can trade news in a way, and it's an interesting area to look into with the market we're in today. Um, but yeah, volatility, you can work with it. It's something that's very heavy right now for day traders, but that's my perspective from the day trader point of view. It's been volatile. We still have wins, but futures is
Mhm.
a good shift. I've seen where people start selling their long capital gain stocks that are available past a year. They start letting go of them and they start buying into other, moving like diversifying into other types of stocks. And in futures, you can also trade gold and silver and all other commodities. So that's what I've been seeing. That's kind of like my little part of like what I've been seeing in the market in the last like 6 months. Uh, and I know a lot of people are betting very high on the market. That's why the SP 500 is there because people are not after the big dip in April. The market has been growing because there's people that are trusting that everything already changed and the uncertainty is going to start gradually moving away and the market's going to be going bullish again. Hopefully we go into a slow bullish market again. That's what's being predicted. But that's from the day trader point of view. Of
Uh-huh.
course, if you have your long-term investments, it's it's important to have that and keep stacking, right? Because I mean the S&P 500 is not going down, and there's big money betting, big money in there. So
Yeah, Fernando, I think you make a really great point because especially with the day trading, you're a lot closer to the hour to hour day-to-day movements of the market. So typically, if you're a long-term investor, you will see the cyclical nature piece a little bit more like on a weekly or like a monthly type of things where you see the shift in terms of okay, some people taking profits off and they're redeploying that money in a different area, but you're seeing it a lot more live, right? Like
yeah.
in time as these shifts are happening. So I know that must be an interesting perspective to see where people are and big stakeholders are selling and where they're going into, right? Like what areas they see the opportunity at. So that's really exciting. And you touched on something too from your experience, with new administration. I'm assuming the first year or the 6 months to the first year tends to be a little bit uncertain, a little bit rocky. Nobody really knows what policies and changes are going to be happening, so everyone is a little bit on edge. From your trading perspective, have you seen a pattern where typically after say like the first year, and I know you mentioned it too, like hopefully we get back to it. Have you seen a pattern where after the first year, let's say second year, third year, things kind of smooth out where it's a little bit more predictable than the first like 6 months to the first year of like a new admin?
Yeah, so to be like real, I think we're not gonna get that. We're gonna have, you know, news every day or every week. And that's just what we have to work with. That's reality, right? To our audience, like right now, there's something going on every day or every week. Things are shifting back and forth. I mean, but what you can see through the fog or through the, through the cloudies or like the storm is the SP 500 keeps growing for some reason. So there's some kind of, push from big holders of the S&P 500 that they're betting high on, these companies. Of course, like Josh mentioned, I mean, these companies, we rely on them so much. Nvidia, Tesla, like, I mean, other companies you can name in the S&P 500, Microsoft, they hold such a big market share in their area, and they're trillion-dollar companies, market cap. So a little dip that goes down is your entry point. April is an entry point. Any dip is an entry point because those stocks are not gonna stop growing. I mean, Apple is a necessity now. I mean, you don't buy an iPhone just to listen to music anymore. You really need an iPhone even to like stay alive if something happens to you now, right? Now it has like satellite or whatever. So these are companies you can rely on now that the S&P 500 holds. And like Josh mentioned, right? They do kick out certain, like they were recently, I think like a couple months ago, they were going to kick out Supermicro, was it? And they were going to replace them. Something going on with like they were reporting the wrong earnings or there was something going on fishy. And they see
Yeah.
that, which is crazy. That means they're doing like what audits or something bad goes on in a company, they're going to replace you really fast. And I think Robinhood wanted to come in to the SP 500 recently. That's why Robinhood is trading at $70 probably right now or higher. They didn't get in, but I mean, if they're sticking to $70 and it didn't drop back down to 30, it means there's still confidence that potentially at some day they're going to be in the SP 500.
Yeah. No, interesting. Good point. Yeah.
Yeah, I wouldn't be surprised to see Robinhood in the S&P 500,
Yeah.
especially, the moves Robinhood's making, like just over the last year. I want to say I made a post on it a couple days, or what was it, like 3 or 4 days ago. And it's like Vlad, the CEO, is like he's expanding aggressively. Like that guy is a monster. Like just the way he's trying to add new features, new tools to Robinhood, and their revenue actually grew, I want to say 50% in the first quarter compared to last year. So they're definitely one of those high growth stocks. Now, for me, I think you still want to be cautious because like especially when the stock becomes the golden child of social media, it can get a little frothy, right? So uh, at least for people who are just brand new to investing, like although I think Robinhood will eventually be included in the S&P 500, just given how much it's grown, its revenue and profits, and how much it's expanding and becoming like in a way, it's kind of building its own lane because what I've seen is like a lot of stock brokerages, like they tend to not really go the crypto route. And then of course the crypto brokerages, like they tend to stay, Coinbase stays with crypto, where Robinhood is willing to do it all, right? Like it's willing to be the Swiss Army knife and just basically give access to different types of investment routes. They recently bought the crypto firm. So like they're expanding into that more heavily. They literally give people the tools, for everything, whether it's futures, options trading, like they make it easy. Now, the big pushback or like the big controversy of Robinhood is like, on one end, they're giving access to the average person to be able to do whatever the hell they want and have access to these tools in a way that empowers them. Like if you genuinely want to learn, futures markets and like you're willing to put in the hours, hundreds of hours to learn and actually try to make it turn into something, like Robinhood gives you the capability to do that. But of course, the pushback is like a lot of people are like, well, maybe they're making it too easy for people to have access to these tools, and
Yeah.
there could be people kind of burning themselves without realizing what they're kind of doing. Compared to starting with that foundation, building the solid foundation first before you. I mean, that's what we preach here all the time. If you're going to want to try the risky stuff, like be my guest, but at least build your foundation first, so you'll know you'll get rich eventually rather than having to hope some miracles kind of play out.
Yeah, Josh, and I think to your point, it's one of those things where there's a natural risk or gap in terms of you can't control everything or how everybody's going to use your tool, right? I mean,
That's true.
look at cars. Cars are amazing, great tools, allow us to get from point A to point B safe. In the summer when it's hot, I mean, somebody's just driving crazy, right? Like putting everybody else's life at risk. So I think I love the approach that they have in disrupting the entire space and understanding and recognize and knowing that, hey, there's way more investors out here or people that are curious about various forms of investing aside from just your traditional model that we've been accustomed to or used to. And then plus the world is changing, right? And so I think with Robinhood coming in, giving us a modern flavor, a modern spin on it, I think it's also helped some of these other traditional, financial firms to also upgrade and update to keep up. And so that's where does the beauty in the competition, the beauty in the access and the tools, right? Now, I know that, of course, everybody's going to use it differently. And I think Robinhood has done a pretty decent job of providing a lot of, whether it's newsletters or learning tools, especially when we spoke with Stephanie. I mean, she highlighted some of the incredible work that they're doing to make sure that the average person and everybody in between that is well informed and educated and can take advantage of the education tools. But again, ultimately, everything is really a choice that we as investors make, right? And so we can decide that, hey, we can learn these tools, take advantage of them, but we need to learn it the right way. It's not about making money overnight. So I think people need to really be cognizant of that and not just be like, yeah, I get it. I should do it. I should do it. But actually put in the work because that's how you reduce your risk and maximize your profits. I mean, Fernando would tell you firsthand, he don't just wake up and just start throwing money at anything and see what sticks on the wall. You know what I mean?
No.
He spends he spends some time doing some homework, seeing what things look like before he makes decisions. Because this is not just about your money, it's your life. And so the better you are prepared, the more competent you become in your knowledge and also again control your emotions. I mean, people play the lottery and think they're gonna win. I mean, they'll put like their whole heart in it. I start spending the lottery money. If I go and play lottery today, I'm already thinking, oh man, if I get this mega million, this is what I'm doing. Right? It's nice and hopeful and fun, but again,
You're
if
trying
you're gonna
to work with something you haven't, like, you're trying to
yeah,
do something you don't have
right.
yet. And
Yeah,
it's,
so I mean, but I do agree that, of course, to play devil's advocate, sometimes when things are too easy or too simplified, we don't actually appreciate its complexity or the tool, right? The value of the tool. So, to each their own. But I mean, I like the fact that they're trying different things, and they have a lot more people to get in the game, and that's good. Hopefully, more people get in the game and do better and make better decisions in the game. But I think for many of us, like some of us learned it the hard way too, right? We got to fall flat on our face first a little bit, eat the dirt, and then dust ourselves off, wash up, and hopefully never eat the dirt again.
Yeah, no, well said, Buffy. I real quick, I just want to say, like, I think it is important to call out how, even 20 years ago, maybe even 10 years ago, I feel like access to the stock market was much more difficult. And to your point, Buffy, what Robinhood has done is they have put pressure on these bigger brokerage firms who have kind of coasted and, they're just raking in these billions of profit from their clients that they've had since, 1820. They've kind of pressured them to have to kind of innovate their products and try to make it more accessible to people who maybe have no financial education. There's a huge segment of people who have no clue how the stock market works, have no clue what an ETF is. And if you tell them, go jump on Fidelity and start learning how to, trade, they're going to be confused. Like there's going to be so much friction there that they're not even going to try. Compared to, like I do want to give credit to Robinhood. Like they have made it easier for anybody. It's simple as hell to like just download the app and you can pretty much navigate it pretty easily. If you've ever used, like an app like Amazon or just like some random tech app, you can pretty much figure out how to navigate it pretty quickly. And I do agree that, accountability is important, right? Like we have to take accountability for the actions we take. And at the same time, I think one of the best ways to learn is kind of to fall on your face a little bit, especially in the early stages where maybe the market has to humble you a little bit and make you realize that maybe you don't truly don't, maybe you're not the next Warren Buffett for some people. Maybe some people are, don't want to discredit the next Warren Buffett. But yeah, I mean, I think it is, to me, it's nice that there is a group or a company working to give more access to just your everyday people. And I think, like you said, the world's changing. We have AI now. It's like it's easier. It's never been
Crazy.
easier to learn investing skills, even to learn how to dive into like financial statements or the health of a business. It's like maybe these tools are going to make people better investors, whether that's using AI to analyze companies in a strategic way rather than just pulling the slot machine lever, right? It's like,
Yeah.
yeah, the world is changing, and I think it's important that brokerages also change with the world.
Yeah, it's
There,
much more complex now, man. Like it's so crazy I mean, just the things that we're seeing and taking advantage of. To us, we feel like it's basic now, but 10 years ago, to your point, that is like unheard of. Nobody can even conceive that idea. They'll look at you like, yeah, you're crazy. What are you talking about? The world is never going to be in this type of position, but yet here we are, right? And I think the traditional brokerages and financial firms have enjoyed a nice, like 100+ years of not having to really reinvent too much or spend too much resources in trying to capture like the retail investor, right? Because it worked, the model works well. There's nothing wrong with it technically, right? I mean, there's nothing really wrong with it. But if you want to provide more access and reach a broader population, yes, then you have to kind of, improve your tools or add some modern tools. And I think, you know, these days people are not one dimension like we used to be, right? Before is a 9 to 5 pension, 9 to 5 401k, and that was it. I mean, just you go on the internet, you go on social media, you see, I mean, everybody has 4 or 5 different streams of income. People taking investing for long term seriously, also dabbling in and out of crypto and day trading and some of those activities. So people are way more multifaceted and extremely sharp in trying to leverage the systems, the tools, the resources that we have. And everybody has recognized, especially through COVID, that hey, I can't just sit here and just rely on my 9 to 5 alone. Yes, that's great contribution, great value, great learnings and everything there. But there is way more to life than just that. And I think if businesses are going to do well, especially these brokerage firms, it's important to recognize that your average human is much more sophisticated and way more complex than say they were 50 years ago.
Yeah.
there's one thing I want to touch on with Robinhood is how they've catered to Gen Z and like the millennial sector. I mean, I think most, I'm gonna do a little research while I talk about this, but most of what these other companies like Fidelity and Schwab and Vanguard, I think the average age for these places is 50. Robinhood's is 31. And so to have the 20-year jump on these things, it's just insane to me. Traditional brokerages, I mean, like you guys said, they're for like retirement, like, retirement stuff, but to get this new wave, this new generation of investors interested, and they can simplify these complex topics to where most people can understand. I think they're just going to go way further than any of these other things in the future. I mean, I think Fidelity and Schwab and Vanguard are going to go anywhere? No, but they're going to have to, reinvent themselves to where it's
Yeah. No,
catered.
Robinhood's been smart, man.
You
They've been
see?
smart. They saw an opportunity for the younger demographic, younger age, knowing that we're the technology group and we like
Yeah.
staying on these phones. And they figured out a way to provide the service that meets the modern individual, right? On all levels. I mean, it's crazy. Whether you're swing trading, future, uh, puts, whether you're a long-term investor, Roth IRA, 401k, I mean, you name it. I mean, these guys are just high yield savings, right?
Yeah.
Whatever, like they figured out a way to provide again supply and demand, and I think it's very, very important. They really understood what we are looking for as essentially the next. We're the workforce now. I mean, the older generation, they're like, hey, yo, we're good. They got their houses already. They don't, they're good. We're the ones for the next 30 years, 40 years. We're the movers of the economic machine. This is really interesting. This may be crazy. I think the fact that they've been able to provide us this level of resources and advancement and tools, we're actually going to have a way higher output in productivity in contribution to society than probably in the last 50 years, right? You add AI on top, you add machine learning, robotics, the productivity that's going to take place right now. I can't even imagine where we'll be even 10, 20 years from now. This is insane.
Yeah, I agree. And I think to answer Fernando, like I think that's why the S&P 500 has been pretty resilient is because there are a lot of tailwinds with productivity and just economic growth over the next 10 to 15 to 20 years. Of course, there's people who are, saying that like, oh, are we getting ahead of ourselves? Is the AI movement, is there really substance there? I think there is. I think it's pretty crazy how impactful these tools are and how useful they can be if you actually dive into them. And I think it's important to remember that we're in the early stages. Like this is the first inning of this AI world, and it's only going to improve, right? So like I think the next 5 to 10 years are gonna it's going to look very different than it does today. And I think we have to be adaptable, not only as investors, but as well as just people who are in the workforce, right? Like, embrace the newness, like, although it might be uncomfortable or it might feel threatening to see that there might be AI, tools coming after your job, or, you might feel like, your career's in jeopardy. But I will say, I mean, based on the research I've done and what I've looked into, like it seems like the people who embrace AI and use it to their advantage are going to be fine. It's the ones who are avoiding it and not trying to learn and not actively embracing the tools that are going to struggle to adapt to this new world that we're entering in. And I mean, it's not like we haven't seen like this before. Like this is not a new story. Like it's a familiar chapter in the human history. The internet was the most recent one in the early 2000s. We saw massive technological breakthroughs with computers, which now we take them for granted. They're just kind of like in the back. We don't even think about them. Like Apple,
Collecting dust.
exactly. Yeah, it's
I
it's
think
just
like
in the background.
fear, I think there's a saying that like fear is what makes you stop from growing. So I think, like you mentioned, like in the 2000s, people were fearful of what was going to happen. Now it's AI. People are fearful of maybe losing their job to AI or fear of things going too fast. But those that face the change and like embrace it, they actually grow. So like that's why like what you're saying about the jobs, I think people are going to be replaced by people that know how to use AI, not going to lose their job to AI. People think that they're going to lose their job to a Tesla robot. No, that they're going to lose the job to the person that knows how to work with the robot. Because the robot's going to be able to do more things, but you're still going to need human coordination or like human abilities for a long time. I don't think we're going to be replaced. It's just going to add on to our intelligence. There's some people that are good in certain areas and they're not good in other areas. Maybe AI can help them achieve those those parts that they're not the best at, because everybody has a flaw or something they're not good at. And sometimes AI can help you get better at that. So that's the part. Fear is what stops you from growing. If
That's true.
you fear the stock market, you fear change, you fear starting your foundational base or knowledge, you're gonna miss out. And then
Yeah.
you're gonna do things with FOMO, which is fear of missing out. And then you're gonna be like, okay, well now I'm missing out. Now I'm gonna go in. No, it's now. If you wait, then FOMO's gonna get you, and it's gonna be pretty bad because a lot of people have lost a lot of money. I've seen people lose a lot of money on FOMO, where they think they missed out on an IPO or they missed out on a stock. They get in, stock goes down. And then
Yeah.
they're like, oh, well, I need to get out now. They get scared. And then that's how people lose a lot of money nowadays, which is insane. But that's the world we live in. We live in like people don't embrace fear or the change, and then they get FOMO.
Agree, agree. I think there's also a real challenge for many people, because at the end of the day, a lot of this is actually new, relatively new, right? Let's For the most part over the last 2, 3 years, and for many people, it's really difficult to kind of wrap your head around the addition of new skill sets, new tools, new way of thinking and operating technically, along with trying to juggle already a survival mode or trying to stay afloat on top of everything you already have going on. So I think many people definitely will feel like it's impossible to keep up. And I could understand and sympathize why that could be their sentiment, because every day you go online, you see a million different reels, right? A million videos on different AI tools or technical skill sets that needs to be developed. And then maybe you might be like, okay, well, which one is really important? Which tool should I develop based on where I'm trying to go, or what career path or what skill sets I want to develop? And then maybe by the time you even learn one of them, it's already obsolete, bro. It's already, you gotta reinvent yourself right then and there quickly, again and again and again and again and again. And so people can feel like, one, where does this end? And two, what is the point of all of this constant upgrading if there's actually no end to be able to actually fully benefit, right?
Yeah.
And I know for a lot of people listening too, they might feel that way as well, and that's understandable. Even me at times, I'm like, holy crap! I hear a new tool, or I see a new tool that we're using at work, and I'm like, oh shoot, I am like so outdated already, like, you know. But I think for a lot of people too, they also don't kind of know, it's like a weird foggy space, right? That they're
Yeah.
trying to like, even some basic understanding of these things. And I encourage people like, hey, you may not have as much time to learn all the tools, whatever it is. At least try to get the understanding of how it will impact your life and how it's embedded in your day-to-day tools, whether it's your phone, your TV, your maps, right? Your directions, the way you communicate with people. Because I've realized that's more of a less educational way, is more of a fun, slight way of kind of interacting with it, learning about it. And one of the best ways to do it is, I mean, you got Nvidia, Microsoft, Meta, Google, Amazon, and they have amazing events, get roughly two to well, at least one time annually, where they talk about their new products, what they're releasing, how they're leveraging AI and the tools and all these things that might be super new to you. Try to have fun with it at first, right? Right now, you might be scared of it. It might be fearful, but once you start using it on your laptop, on your phone, you start using it to assist you a little bit with some of the work that you have to do, and you see the benefits of it, you're gonna be like, oh wow, okay, so this is cool. It's actually here to, it's like your assistant, right? In a way, if you approach it that way, start there. Not build a relationship with the AI, but you know what I'm saying, like, but understand that its capabilities, how it can help you, and maybe that also helps you kind of pivot and change your perspective on the way you might view these things. Because trust me, to Fernando and Josh's point, these things are here to stay, and they are just warming up. I mean, when I tell you these big firms are spending billions and billions of dollars to take advantage of these tools and systems and use it to make decisions, listen, none of us can afford not to make some progress here. But try to have fun with it. Don't be that person that's just like, no, 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 and then you get left behind. And yeah, you just,
It's
that's
a,
not a good spot to be in.
I think I look at it as in like, getting into a league. If you're gonna get into the stock market, to our audience, like whoever is gonna get into the stock market, you're gonna be working with money. And to get into something that you could potentially, risk losing money or getting money more than what you have, you really have to get good at that in some way. You can't just go into the stock market game, um, or whatever you want to call it, it's the stock market area of your life, and say, well, I don't know anything. I'm just going to walk in and see what happens. That's not the best strategy. Like Bafi was saying, there is so much changing now where AI is starting to, be integrated into the stock market as well now, where research is being done for you now, and you don't really have to do it. So these people that are getting into this game, like, hey, maybe research that, because I mean, for all of us on this call, we research before we do anything. We do our part, we do our homework, just like, school. Like you got to do your homework, so you know how to go out there and get that ability.
Yeah, just a quick plug, man, for anybody that's also like, oh, thinking about individual stocks and so forth. Granted, like I said, I'm not buying any at the moment, but one of the things I do is I actually use some of these tools for, like, let's say if I hear a stock I'm curious about, I'll use it as a first like pass, a first like filtering process to see if it's even worth my time, right? I don't even care if you use ChatGPT. You can go in ChatGPT and prompt it, ask it, hey, give me the last 5 years of X, Y, and Z's company's balance sheet, income statement, and give me the top 10 takeaways from that. Or also give me the top five risk pros and cons of this company and the industry. Boom. It would just give me all that work done before. It would take me time reading the 10Ks, annual reports, analyzing it myself, doing all types of stuff and all types of research, different tools. I can get that in 2 minutes. And if I look at it, I'm like, oh, this company sucks. Like, if, for example, if I pick Snapchat, I'm like, oh, these guys suck. They don't make no money. I'm not wasting my time on that. Right. So
Yeah.
sometimes it's about working smart and working strategically. It's not always about working hard. And that's really what these tools are here for. That's just a fun little exercise or example. And so I think the more people learn to have fun with the tools and just use it for like daily practical stuff, it can just be like, oh, how do I improve my protein intake or whatever? I don't care. I'm interested in these type of shows or movies. What are the top ranking shows or movies? It doesn't have to always be like serious, crazy work. It can be fun, you know?
Yeah.
So be creative, have fun with the tools. And I think that helps you get a little bit more comfortable around it.
Yeah. When you're first hearing about AI, and even if you have like a desire, like, okay, I know I need to learn it, you kind of stare down that hallway. You're like, where the hell do I even start? Like, what do I start with? Like, there's so many different routes and like things to learn in the AI space. And I think what I started with using it was just to kind of what you said, was just to use it to learn. Like maybe I had questions. Like I feel like that's the first step with anybody using AI tools is they start to use it as the new Google, right? It's like whatever questions you have, you start asking the AI. The cool part is like you can ask follow-up questions, and it has the context to what you asked. So like it can tailor the responses to whatever your dialogue is, which is pretty powerful. And I've also used it as like for stock research. One of my favorite ways to use it, especially with like companies that I'm considering, is like I'll just kind of like throw some hypothetical scenarios. I'm like, what needs to happen? If I'm looking at a company like maybe even like Palantir, I'll be like, what needs to happen over the next 5 years for them to justify their current valuation? It's like there's a lot of people who say companies like Palantir, a lot of these growth stocks, like even Robinhood, you can ask that, and it'll give you some like interesting things to watch out for, like maybe things you would have never even considered to take a look at or to pay attention to, even if you watched every YouTube video out there or read hundreds of articles. And I would say I would caution like you definitely don't want to like replace it to like make all of your decisions for you and just like
Yeah.
outsource all of your thinking. Because like it can make errors. It's not perfect, especially these early stages, but definitely don't fear it. And at the very least, I think if you have some fear like around your career or starting to question like, is this thing going to replace me? Ask it. Ask it like, hey, how can I make myself unreplaceable?
Yeah.
Help
Good
me
point.
build a plan to
Yep.
use you so I don't get replaced out of my job.
Yep.
Like, go ask ChatGPT that.
Yeah. Ask her for an escape plan on how you make sure you don't get left behind and become obsolete or get dropped. I use it to make food sometimes. I'll ask her for ingredients and stuff. I have an air fryer. Man, you should see me. I'm like 5-star chef right now because of that. You know, I'll ask her for ingredients and like processes on how to make certain things or whatever. So I try to just have fun, as much fun as I can with it because it's gonna be in our lives no matter what, and it's gonna take more space in our lives going forward. I use it whether it's for the calendar, whether it's to-do list, whether it's just shows or things I'm curious about, whether it's exercising, whatever it is, it's here to really serve us. Um, you can use it to your advantage, right? It's not always about being fearful, like Fernando said, being fearful of like the negatives or the negative byproduct that it can bring to job markets in various industries. But okay, where are the positives at? How can I maximize that and really, build the life I want to live?
There's one thing that I think people will look at AI and how it can benefit your life and how, the fear of it. But with the younger generation, I mean, I don't even know what I am. I think I'm Gen Z or whatever it's called. But kids are forgetting on how to learn. And maybe it's just a transitioning of how to learn. But from what I can see, it's they're relying for this on school. I mean, kids aren't learning, they're not reading. I mean, I can't tell you the last time I saw a kid, like last time I saw a kid with a book. I mean, they're replacing these books with, computers and whatnot. And I don't know, maybe I'm just talking like an old head now. But I think it's going to have a play on people, maybe it's just learning a different way and I just haven't realized it yet. But it's I guess the traditional sense of learning. I think it's going to have
Mhm.
at least a negative impact I mean, dude, if I'm being completely honest with you, AI has helped a lot of people get through school and, maybe not some helpful ways. I mean, I don't know. But and that's the thing is that like, I didn't, there's some topics, you didn't learn, but you passed. And I think that's
Yeah.
going to play a part into some issues, not just so because you don't need to know like, all of the last, United States presidents, but it's just teaching the brain how to learn. So I don't know. We'll have to see how that plays out.
Yeah, that's interesting. I definitely don't want my doctor just punching some stuff in AI, man. Like you can't be doing a surgery on me and asking the AI, hey, what does this
That's how
bone
it's gonna
does?
be.
Nah, man.
ChatGPT, how do I do a heart surgery?
That's how it's gonna
Yeah.
be.
Yeah, man. But Piers, you bring up a really interesting point, man, because I think there is an evolution taking place in just learning and
It is.
how we learn in general. But I also know that not all things analog is actually negative or bad, right? Because, for
Yeah.
example, kids have a tough time with attention span. They have a tough time with creative thinking, with problem solving on their own. Because now they could just pick an iPad and ask the iPad or just,
The
right?
thing.
But then what do you do when you're actually in the real world where those things are not applicable in solving certain situations, right? Like you can't just, yeah, maybe you might get some pointers, but there's more to life than just those bullet points. If you're having certain difficult conversations with your partner or in the business meeting, right? It's live, like we're live right now. You
Yeah.
can't just go and then ask the AI, hey, this person said this. What should I say
Yeah.
politely? Or
Yes.
I don't know, right? There's certain
Yeah,
pieces where it's difficult.
it's always gonna be put to a test.
That's
Yep.
it.
I kind of I'm excited for the future and for the kids, but I'm
Yeah.
also scared for them simultaneously
Agreed.
because we can definitely see that over the, especially COVID too. Oh my gosh, I think
Oh,
there's so much
but
damage.
you said it. I think you pointed it out clearly. It's part of our evolution. I think at some point we saw this coming. We saw that books were no longer going to be around. I think when books were around, there was people that had the book and they didn't really use it. They weren't good at school. They had attention
True.
span or they didn't focus on it. So I think just everybody has a different way of learning.
Yep.
And I think AI is very customizable, which is great. So it kind of, you know, puts itself like to kind of like your way of asking questions, you know. I think when you were in school, sometimes a question will be a stupid question. AI doesn't care if it's a stupid question.
Right.
They will answer it the best they can. And then you will be able to answer it, but then you will be put to a test on that, right? When you go out to the outside world where there isn't robots walking around yet, and you're gonna have to socialize and face reality and you know the world we live in. So yeah, I think that's a good point. What you said about the evolution is already here. We're living it, and there's more to come. And we can't be sitting back and watching. I think we have to be part of it,
Yep. I
especially
agree.
our
I agree.
generations on here and our audience too. You have to kind of just become part of it, kind of like becoming part of a community and or becoming part of society, right? You have to go out there and
Yeah.
take the
It's a
tools.
tough balance. It's a tough balance, right? Because you have to not only continue evolving, but you also have to make sure you don't lose certain core pieces of what makes humanity
Yep.
and our connection deeper and stronger beyond just our own selfish benefit, but to be able to go beyond ourselves and think about the bigger picture and think about priorities beyond our lives, right? So I think that's where the balance is going to be really, really difficult for the next generation because we are at least fortunate enough to kind of have half of the old cloth, so to speak, and half of the new cloth. So we sit in the middle, which is really the sweet spot. So if you're alive today, right now, and you're listening to this podcast, understand that you are probably at one of the best times in the history of humankind ever. Right, you sit in the middle. Of course, sometimes it's chaotic. Don't get me wrong, but it's actually pretty decent. Um, I don't know how the next generations are going to, of course, they'll find their own way of normal, right? Of their own way of working and operating and moving forward. But I think there are some really important pieces that we're going to lose. Again, I guess that's what evolution is, right? I mean, when you go
Yeah.
from being a fish to an alligator, you're gonna lose something. You know what I'm saying? You can't take everything with you. So,
No, you're
you know, I guess it's all just, you're right. To Josh's point, none of this is actually new. I think we're just seeing it at a different scale,
Yeah.
or You're right. Nothing is actually new. You're right. It's interesting now.
No,
That's
dude,
like full circle moment for me just then.
100 years ago, I just double checked. 100 years ago, only 30% of houses had electricity. And it's like, think about how much has changed just over 100 years. Like now we take electricity for granted, but like back in those days, like that was the technology, right? Like electricity was kind of changing just everyday life. And I'm sure people who worked in the candle industry were worried about that, right? Because naturally innovation kind of does replace and change up the way business is done or just the way people like spend money, right? Because like if electricity's there and it starts to become the default way of living, people are going to start to buy that rather than candles. But I think the Nvidia CEO he made a good point talking about how over the next like 5 to 10 years, every industry is going to have to kind of re-pivot how it kind of maneuvers through the world, right? Like AI is going to be the core part in some way or another, just like the computer was, right? Like just like the computer, like all these companies had to adapt to using computer systems and softwares to stay competitive and to not get their margins eaten alive. It's literally, yeah, like Bobby said, it's a full circle. Like I mean, it's not AI is a little different, but fundamentally, it's just a new part in the innovation story of where we're at. And I will say, like, I do empathize because like it is, I feel like it is speeding up, like innovation in general. So it's like you almost have to be super adaptable, especially with how competitive the job market is for like higher jobs as well. Like you have to be adaptable because things like it just seems like everything's speeding up. Like even that was a big concern like over the last 20 years with the computers and just how they kind of changed the speed of business and like how businesses had to be mobile and adaptable because they saw what happened, to all the companies who didn't adapt. Like think Blockbuster, right? Like, the reason Blockbuster got eaten up by Netflix is because they thought their business model would stick, right? A lot of people, like I've done a little bit of research, but I don't think people realize like how many people were skeptical of the internet or said that it wasn't going to be something that actually took off. Like people just called it a hype thing and rolled their eyes at it and said it would never last. And here we
Yeah.
are, right? So it's like
Yeah.
it's tough, but like I think it highlights one of the core values I would say of the market hustle community, which is remaining a student, like always learning and remaining adaptable. Like that's not only is that going to let you survive in whatever happens, but it's going to let you thrive and take advantage of whatever new wave comes our way.
The most important thing in the next 15 or 20 years, and mark my words, it's going to be human capital, um, skills. Because when you have too much of something, which is AI, and you have so much intelligence, then we start missing skills, human skills. So I think people should, of course, like Josh said, be a student and get your skills, work on them every day. Because there's going to be a point where these companies are going to be like, okay, we have enough AI to automate everything we do, but we still need humans and we need human skills. Because there's certain things that can't be done without humans. So that's going to be huge because probably there's going to be companies that are going to have like, hey, you need ten people that are good at this skill. They're gonna basically capitalize that and create companies out of that. So that's what I see, where you're going to start getting less people that are becoming students and they're going to rely more on AI and they're not going to be skilled. They're not going to have the skill set. And that's going to be, scarcity on that, if that makes sense.
Yeah, I think it does. It definitely makes sense. I know we spoke a lot about a certain balance of both the good, the pros, the cons, the fear, the excitement, but I think overall people should be excited about the direction and that humanity is going in. And I have an interesting stat right here, and I kind of want to definitely share that. I wish I could actually show visually because it would be so much more easier. But just picture a few columns, right? The first column is really era or century. The next column next to that is percentage of people that are rich, right, based on population. And then the next column is middle class percentage, and then poor slash broke, right? So prehistoric time all the way till now, the percentage of rich has gone from like 0%, which I mean, yeah, nobody was rich before. Damn near nobody was rich before, all the way to like 10%, right? In terms of from 2020 to so 10% rich, right? Middle going from zero in prehistoric class all the way to 45%. And then it may went to 2%, 5%, 10%, 40%. Now it's at 45%, right? On the poor column, Prehistoric time, literally everybody was poor and broke. And that number has gone down to about 45%. To me, that number alone is huge in terms of how far we've come as humans and how far we've come in our ingenuity, advancement, creativity, collaborations, productivity, just connecting the dots all around the world and building a society that really nobody can spend by themselves. Nobody can grow by themselves. And I think that's that human testament at the core of all the technology and industrial and changes and stages of timeline. And so I know there's a lot of negativity happening, a lot of difficult moments that are arising currently in the world. But similar to investing in the stock market, right? If we zoom out and look at where things were way before we even got here to where things are now, I mean, anybody from 200, 300 years ago would look at us like we're the aliens,
Yeah,
you know?
it's
And
true.
the fact that we've been able to mass produce agriculture, food, grains, wheat. I mean, the ability to extract oil and maximize it and use it, not just from point A to point B, but to put it in our clothes, in plastic, in products, in tools that saves lives. The advancement in knowledge, in human anatomy, the advancement in medicine. I mean, you name it, right? Like before, all you could eat was bread if you're lucky, or you had to actually go hunt a woolly mammoth or some crazy stuff. Now I can sit at home and because of technology, I can get Uber Eats delivered to my door, right? Even if I don't have money, I could use a credit card to eat. If I can't afford school, I can borrow money to go to school, right? So I think sometimes we get a little bit stuck in, okay, all the things that's happening now. And similar to the stock market, like in April, we were so stuck in what was happening then that when you zoom out and look at it from a big perspective, you realize like we're actually pretty good. We're actually pretty good. Not perfect, but we've come a
I,
long way. I mean,
I
Yeah.
think
look at the world right now. We all connect. We all can have conversations. We can all live next to each other. I mean, before I would just have to come to your village, kill everybody, and take whatever, right? So, still got a long way to go, but I think this is something really big and positive that we should all learn and kind of keep in mind despite all the changes.
think Josh mentions that a lot in the Market Hustle page, where you have people nowadays where their whole paycheck goes towards their debts. And I think right now society doesn't really have a poor person, unless I mean there is homeless people for certain reasons, but I think that there was more of that back in the day. And what we see the shift is that the new poor in a way is the people that are so indebted in debt of trying to show a lifestyle they don't can't afford, where they're taking home such a small piece that that is basically considered poor in a way, if you look at it, because if you're taking home $300 from this big check that you have, you can't really do much with that. You can't grow with that much. I mean, you could, but it's going to take you some time with inflation and all that, the things that are happening now today.
Well,
So I think that's like the new close to poor class, but you have to kind of look back. If you look at your finances for the audience, like try to look at what you're spending your most on and if it's really worth it or not. If you can afford it, go ahead. If you like it, if you could pay it and still grow, go for it. But new poor, I think it's looking like that, like a lot of debt, and our country is in a lot of debt right now. So what does that consider us in a way?
just setting the example, right?
Yeah.
But it's the golden handcuffs, man. Like I
Yeah.
think people would be surprised to learn how many people even making like 80,000 a year, even 100,000, 120,000 a year, even lawyers,
Which
business
is a lot.
executives, people would be surprised how many of these people are living paycheck to paycheck because they're drowning in debt, right? Like they are so stuck in their job, they're immersed in their job because they've gotten themselves in a situation where they just have none of their paycheck goes to them. Like it enters their bank account and goes right back to bills and makes other people richer. It's not making them rich. It's their bank account's just the middleman. And unfortunately, there's a lot of people in that situation. And of course, like there's lots of variables at play given that situation. But I will say the biggest one is I think in modern society, it's very easy to finance anything. Like you can literally finance burritos through DoorDash from Chipotle now in 2025. Like it's
Exactly.
nuts, right? And so like you're almost that's kind of what you're up against. Like you're up against the banks and these credit companies kind of, trying to give you like, hey, take the shortcut. It's all right. You can pay it later, like deal with it later. Like there's so many forces at play that are trying to get you to cave to take the shiny object and get it now, like get everything now, right? It's the instant gratification age that we enter in. And I think in the modern world, the real flex is being able to say no to it and being able to continue to control your income and maneuver it towards assets, towards ownership, so that you can get to a point where work becomes optional. Like, sure, maybe you still want to work. It doesn't mean stop working altogether. But like, if you get to a point where you don't have to work, you open up a lot of paths for you, right? Like you can open up your own business, or if a job starts to piss you off or you just don't like it anymore, you can just say bye. Go look for another job, right? It's not saying like don't ever work. Like I think for me, like I enjoy working. Like I enjoy doing what I do with the market hustle. So like I don't think I'll ever stop working, but at the very least, like just having the leverage to be able to stop, especially if something comes up, whether it's your health or just life in general. I think that is really what the goal is, and like that's the main objective. But yeah, we got to stop with this debt, man. This consumer debt stuff it's getting out of hand.
Well,
I
the thing
think
about it is that there's always an exit for a lot of people, and then I think you just look at percentages. It's pretty high right now. Um, there's a quick exit. It's called bankruptcy, and everybody does it. Even the corporations that cannot afford their own debts get out through Section or 11 or whatever it's called. So it's an easy way out. So people look at it as in like it's not that bad. Let me get in a bunch of debt. And if worse comes to come, I go in bankruptcy, which is the worst thing you can do, you know? So like you kind of got to look at your decisions and make the right decisions. Like what Josh said, right? Look at making the right decisions is what's gonna help you.
right now the wealth gap, I think, is just going to keep getting larger, and that's, I think, kind of the whole reason that we're all saving our money and investing and kind of doing this thing. It's for the future, so we can kind of be part of that. Like I feel like the only hope is to invest and save your money and be smart with your stuff, and that's kind of how you can go from everyone wants to be on the right side of the wealth gap, and I hope everyone, listening to this can understand my point of view from this. But it's just going to keep getting larger and larger, and you want to be on the side to where it's, you're on the upside. And the only way I think you can legally do it is, by investing your money and stuff, and being smart with it and playing the long game, because it's just going to keep getting nastier and nastier and nastier.
Yeah, well, and I think even with all the changes we're about to go through, if you're in your 40s or 50s and you're just, getting tired with work, or maybe you're in your 20s or 30s right now and you're, thinking of the future, like, oh, I'll always work, I'll always work. But like, look what's happening now. Like, we're being forced to adapt. Like, you kind of have to adapt to the changing environments. And what investing does is like when you are older, if you invested your money and you stayed consistent with it, it gives you the option to not have to adapt as much. Like maybe you want to just kind of chill and not have to deal with, the modern corporate America, or however things advance into the future. Like investing paves a path to where you can just chill. Maybe you want to spend 5 years traveling the world. Definitely go check out Japan if you haven't. Tokyo was incredible. But yeah, go, maybe you want to spend a couple of years just traveling the world and just truly embracing and enjoying life in a way that work isn't eating up all your time. The best way to get to that point or to that path is by ownership, owning stocks, owning real estate, owning your own business, like whatever it is, like you got to get ownership. Like that's the path out. And whatever happens in the future, whether the wealth gap does increase, whether AI does demolish jobs, and whatever happens, if you're investing, that's your hedge. Like that's how you take more control over your life, is by owning these assets and having more control over an income stream that isn't dependent on you selling your time. Guys, this was a lot of fun. I feel like we talked on a lot of different angles. We touched on a lot of stuff. I'm really pumped up for the future episodes we have planned. But why don't we just go ahead and we'll just kind of go around. If you guys want to leave maybe one thoughts with the listeners, maybe a summary of everything we talked about. We talked about so many different topics, but Boff, if you want to go first, any last comments to our lovely listeners before we officially wrap things up?
Yeah, I know we touched on a great bunch of things, but I want to leave the audience with something that's a little bit more um, easily forgotten within our day-to-day lives and our responsibilities, which is it's good to take breaks. It's good to change things up a bit, reset, recharge, and then get back to killing it, right? Especially if you're somebody who works a lot, who's exhausted all the time, barely get enough sleep, feel like you have to eat while you're driving, eating on the go. At the end of the day, that's, hard work is good, it's important, but without good health, none of it is going to matter. You can invest all the money you want, but without good health, you can't even enjoy it. Or you might just have to use all that money to take care of your physical and mental health, right? So, especially with the summer, make sure you get out, get some sun, go in the park. It's not always about spending money, right? Especially if you're somebody who's working your way out of debt, just go to the park, spend some quality time with nature, go for a run. There's festivals, there's activities, things that are free. Make sure you're doing these things with the people that you care most about. That's all I'm saying. That's all I have for you. Enjoy the summer. Enjoy the summer. Take breaks where you have the opportunity because the work don't stop. I mean, it just
Doesn't.
24/7 is going to keep going. So make some time for yourself and the things that matter to you.
Yeah, agreed, man. I've almost found that the more time you make for yourself and the more time you carve out to take the trips or spend quality time with the people you love, it actually makes you more potent in your job. It makes you more
Yeah.
impactful at,
Sharper.
yeah, it makes you
Yeah.
sharper.
Sharper, tougher, better
Yeah.
perspectives, more dynamic, come in with a different energy. And maybe, Josh, maybe next time we can talk a bit more about your Japan trip because I definitely want to hear a lot more about it. And maybe I'll dive a little bit deeper into Saudi and Dubai, what that entire experience was like too.
Yeah, 100%, 100%. Pierce, how about you, my friend? Any last comments before we officially wrap things up?
Just take care of your money, take care of your health and your friend, like, your circle, your family, your friends, and everything else will follow.
And stack those assets, most
That's
important.
absolutely. Yeah, it's the
Got to
first.
keep that.
Facts.
Fernando, how about you, my friend?
Uh, I think consistency or being consistent is what I'm gonna drop like today here. I think that with times how they are, where things can feel uncertain and ups and downs, staying consistent. Maybe you can fall, get back up, but always learning from those falls. And then consistency will get you there to keep going as much as you can. And what Bafi was saying, I think the highest wealth, the highest way of wealth in the world is health. If you're not healthy, there's not really much you can do. You can't trade if have a problem with your health, and you can't really think well. So if you just take care of your health and stay consistent on whatever you're doing in the stock market, because things will stabilize. History will repeat itself over and over again.
100%. Health is wealth, right? That's the
Yeah.
life right there. Well, good stuff, guys. Market Hustle community, we actually will be having a special podcast episode towards the end of June. We're actually going to have our first live in-person podcast. We're all going to be there. It's going to be a lot of fun. I think we're going to save the guests that we're going to have on. What do you guys think? Should we keep it a surprise? Should we give any hints? I don't know.
I think you should give him a little hint, man, because yeah, I think you should give him a little hint. Give him a little flavor
I
of
was
what's
gonna
to
say
come.
surprise. Okay.
Uh, let's say this. We had a podcast episode with Fernando, and I think we talked over the goal, didn't we? In
I
your episode?
I think, yeah, no, I want to say it was, I don't know if it was after the podcast or if we did it during the podcast. It's been a goal of the Market Hustle for a while.
I'll say if you want a hint, I think it was episode 36 where we talked over the goal. So go check that out if you're
Yeah.
we'll kind of plant a little
That's it.
seed.
That's a good one.
Yeah, episode 36 might have the answer in there if
And
you.
you have to listen to the episode to find out because it's at the end.
Yeah. Good stuff, guys.
Okay,
Hey,
I'm gonna just go to the end.
well, hey, just want to say thank you to everybody who tunes into these episodes. Again, it's been a couple of months since we have done one of these group episodes. This was a lot of fun. We're going to aim to do another podcast episode next week before our first in-person episode, as well as, so for more, I guess, a quick hint, we are going to be in Manhattan. So we are doing a small meetup with some of the podcast listeners. If you're interested in coming, send me a DM at the Market Hustle. We'll send you some information to potentially RSVP. It is going to be a smaller crowd. We're intentionally just keeping it pretty tight. So it's going to be kind of first come, first serve basis. So if you are interested, make sure to DM me ASAP so I can send you that form. just because we got to take reservations out so we can actually reserve spots and get to meet more of you in person. With that being said, episode 51 is officially wrapped up. We will see you back in our next episode. Have a great rest of your nights. Bye-bye.
If you feel just like I do, link up, come and join this crew. Hey, I'ma go invest and I'ma watch my money double, take it to another level. With that market hustle, ay, always play it smart. You ain't dealing with a sucker, take it to another level. With that market hustle, I'ma hustle, ay, hustle. With that market hustle, I'ma hustle, ay, hustle. With that market hustle, I'ma hustle, hustle. With that market hustle, I'ma hustle, hustle. With that market hustle, go.